Are you running your business using your credit cards and personal funds, and you've been told bootstrapping is the best thing to do for your business, and maybe you've been told it's really not a good idea to raise money from investors? I'm Jenny Kassan. I'm an attorney and capital raising coach, and in this video I'm going to cover what is bootstrapping exactly, what are some of the myths about bootstrapping, when is it a good idea to bootstrap, and when is it a good idea to go ahead and raise money for your business. So what is bootstrapping? So basically what people mean when they say bootstrapping is you're not raising money from outside sources like investors. You're using your personal assets like your credit card, your savings. Maybe you have a job on the side to subsidize your business, because it's pretty normal when you first start a business, and even sometimes several years into your business, there's a lot of expenses and your revenues don't fully cover all your expenses. That's absolutely normal and nothing to be ashamed of. Some of the most successful businesses in our country have gone for years without having their revenues cover their expenses. So you need some money to cover your expenses. And there are a lot of myths out there about bootstrapping, and you'll be told like, oh, bootstrapping is the best. You should always try to bootstrap if you possibly can, because that way you're not beholden to outside people telling you what to do in your business. Don't raise money from investors because it's so hard, and your investors will come in and be your boss and they'll push you to do things you don't want to do. And you know, there are some cases where bootstrapping can make sense. So if your business is really on a path to quickly becoming profitable, and maybe you just need a few months of funding to get things off the ground, and you have the resources available without putting undue strain on your family and your personal finances, then by all means, use your personal finances to fund your business. But I think way too many entrepreneurs are bootstrapping, because it's really not realistic for a lot of people to use their personal assets and their family's assets and their credit cards and putting so much pressure on their own personal financial situation to fund their business. And what happens is you often end up ruining your business because of bootstrapping. Because bootstrapping tends to mean that you're operating in a mode of scarcity. You can't spend money on the things that would really make your business successful. So you end up starving your business of resources and kind of building in the seeds of its own destruction. To have a successful business, you really do need to be able to invest in things to make your business work and make money. And so that might mean, you know, having a really good website, having a professional sales team, hiring a professional marketing team, having a high quality computer, investing in really good customer support. So if you can't do all of those things, even if your business idea is awesome, it can often fail because you just don't have the resources to deliver well on your promise to your customers. So if you feel like, yeah, maybe bootstrapping isn't right for me, but you aren't sure what else to do, go ahead and say something in the comments. You know, let me know, like, what have you been thinking about bootstrapping? Is it working for you? Are you struggling with bootstrapping? Are you not having enough resources to run your business in the way you would like to? One thing that happens a lot when you're bootstrapping is you might be wearing all the hats in your business, which is really not a great idea, because there's something that you're really good at. You need to be able to focus all your energy on doing that thing in your business that is your genius and the thing that you're awesome at, that is the reason why you started your business in the first place. If you're trying to do all this other stuff that really you should be outsourcing to other team members, you're not going to be at your best in your business. If you're thinking, yeah, I understand, Jenny, what you're saying, maybe I shouldn't be bootstrapping, but what really is the alternative? I hear that raising money from investors is so hard, and they come in and they take over your business. And so I just want to share, I'm not going to go into a lot of detail. We do have other videos that go into way more detail on this, but you can raise money for your business in a way that lets you stay completely true to your values, vision, goals, plans. Does not require you to give up any control of your business. And there's so many different ways to raise money for your business, and so many different investors that might be right for you. So when you hear people say like, oh, it's so hard to raise money for investors, or unless you're a high growth tech company, you can't raise money for investors, or, oh, if you raise money from investors, you're going to lose control and it's very expensive money and you're going to get diluted and you're going to be pushed to sell your company when you're not ready and you're going to be pushed to compromise on your values. That is absolutely not necessarily true. And the reason those myths are out there is just because there's one way of raising money that's very well known. And we call that the venture capital model. And when you raise money using the venture capital model, a lot of those things are true. But most businesses don't raise money that way, and it's not a fit for them. If you think about it, venture capital has only actually been around for a few decades, and we've had many, many successful businesses become successful without venture capital. In fact, only 6% of the companies in the Fortune 500 list raised money from venture capital. So you need to know there's other ways to raise money for your business. And if you want to learn more about that, check out this video here where we talk about raising money without selling your soul, and this playlist here. All right, thank you.